Today, Friday, I just want to do a quick update on UBS. They had the vote and it did go against UBS. You can see here that UBS now faces up to 26 billion in capital demands from the Swiss bank reforms. Again, we were talking like 25 billion, so you can see it came in right at 26 billion dollars. Now, of course, UBS has been saying this is an overreaction to Credit Suisse and so forth. Just in my personal opinion, I would say that we should do this with every single bank, but hey, who am I? Now, in this first paragraph here, the first line, they say, hey, listen, they're debating on how long this is going to take for them to implement these new capital requirements. There are talk that this could be 10 years before this comes in. Now, also interesting, I know that we all think of, capital. That means they have money sitting there waiting, in case there's trouble with the bank. But look at this middle paragraph. They will update on how banks have to quantify intangible items, such as deferred tax asset, in-house software, and other hard-to-value items that they have on their books, adding up to a potential increase of $3 billion. So what is this saying to you, right? What they're saying is that part of the capital that UBS keeps to pay off losses in their portfolio are actually deferred tax assets, in-house software, and other hard-to-value items. Think about what they're saying. It's hard to value, but we're going to use it to pay off if we go into a crisis and we have to come up with money. All the banks do this. I don't know. What do you think of that? Now, that's on UBS, but we also mentioned yesterday of the issues that are facing the SMB, trying to bring back $1.1 trillion worth of Swiss francs into Switzerland so that they can use them either to pump the economy, protect their currency, lower their interest rates, whatever they need their reserves for. Because remember what they did. They did QE, but took the money and bought about 10 other countries' stocks and bonds. Now, to sell $1.1 trillion, they're going to hurt somebody's stock market out there or the bond market. But more importantly, when they bring the money back, the Swiss currency is going to increase, and they don't want that. They're already up 12% for the year. And then today, this morning, this happened. The U.S. put Switzerland on the watch list of trading partners. What do we mean by that? Well, Switzerland and 8 other countries who have a trade surplus with the United States have been put on there as currency manipulators. And of course, China, Japan, Korea, Taiwan, Singapore, Vietnam, and Germany are also on the list. And they're just saying they have unfair currency practices. And of course, the Swiss Central Bank comes out and totally rejects the United States assessment of the situation. So what does this mean to the Swiss and it means to us? To us, I don't have a clue. We're the ones putting the pressure on Switzerland. Switzerland has a huge issue here, and it is so freaking complicated. And so here if they want to bring back the $1.1 trillion, I would imagine they would have to somehow start weakening the Swiss franc so that it kind of like offsets each other. When you bring the money in, they buy it, and I don't know. Again, never been here before. Who knows what's going to happen? And, when you look at Switzerland versus China and Korea, these are major exporters, okay? Switzerland's not in that game. They have a trade surplus with us, but it's not the same kind of trade. I mean, you're talking chocolates, watches, and stuff like that. I mean, come on. But what is Switzerland going to do? I have no freaking clue. And if they are forced into a situation of selling off their $1.1 trillion, guess what? That's going to affect a lot of countries, their stock markets and their bond markets. And guess what? I'm going to do another video in a few minutes on the bond markets. And trust me, we are not in good shape here. We cannot have this happening. And yet here we are today, putting this on Switzerland. Mind-boggling to me. So, what do you think? What should, everyone's come with the Swiss. Some great ideas, by the way. People say they should sell their 1.1 trillion, just put it into gold, and then bring the gold back to Switzerland, which would be great, except for one thing. Then you still have to turn the gold into the Swiss franc so people can spend it. Up goes the Swiss franc. So what do? They have to figure it out. Like and follow, and thank you for listening.